Okay. Launch with tiny size. That is a good question. I wonder what the smallest size you can have here. I wonder what the smallest size is. Probably. That's a good question, dude. I don't want anybody to go just think, hey, now that you know how to code, you could build a profitable bot, or you could just send your idea to OpenClaw or Perplexity or any of that. This is hard work. We're chasing the $31 billion man. If it was easy, everybody would do it. That being said, it's doable. It's absolutely doable. And I personally believe if you're trading by hand right now, that's just my belief. You got two options: stop trading or automate your trading. If your strategy actually works, a robot can execute it better than you. Remove all emotions and just watch your bot perform or not perform. If it doesn't perform, kill it. But that goes back to my point, which I do like about crypto, is the minimum size is very low. So I'm assuming that the minimum here is probably one stock. No, it's even less. It's even less, right? Because they have fractional shares. So I think that is going to be fine. I didn't see any minimums along the way, but I did see fractional shares. Okay, options Greeks. This is another very interesting thing because, again, it goes back to the options chain. The options chain is not easy to get, usually not free. And you could do some math on the options chain, see flow. I know a lot of out here, a lot of they're called options flow traders, and they trade 100% off that. Okay, we can get that data now. But even better, we got the Greeks again to that point of maybe 5 years ago. I mean, for myself, okay, 5 years ago, I stayed away from options. I knew there's some math in there that if I could geek out on math and be really good at math, I could probably pull some alpha. I knew that, but I wasn't great at math. But now we have AI, and you can see here, you can get the Greeks. Now, what are the Greeks? Well, that's where the like how bad do you want this? How bad do you want this? You can see the responses here. We get the Greeks. It's pretty fire. And everybody, including myself, is like, Greeks, oh, look at those numbers. Yuck. You just got to memorize it. Delta, how much they move per dollar of stock that moves. Out the money delta is like between 0.1 and 0.3. At the money mid, it's like 0.5. In the money is like 1.0 delta. Pretty much the lower the delta equals the more leverage. Gamma, the rate delta changes. When it goes your way, gamma accelerates delta, or it collapses it. Theta, time decay. This is an important one. This is a very important one in my book. Now, I'm not a financial advisor, so I can't tell you anything, but you want to see the rate of decay, right? If it's a negative 0.4 theta, that's time decay. You lose 40 cents per contract per day. And that's where people get smoked on options. They don't even look at these Greeks. They're just like, YOLO, GME, baby, GME. So theta, I feel like, is, for me, that's the one I look at most. It's time decay. And the example is if it's negative 0.50 theta, then you're losing 50 cents per contract per day. And remember, option contracts times 100. Vega, sensitivity to IV. So for example, Vega equals 0.10, news drop, IV spiking options goes to 10 times 0.1 equals $100 per, so 50 to 60. And then I have on my notes, like I have a note right here. I'm reading it. I have a piece of paper because we explored this, dude. I'm chasing Jim Simons. I explore everything. I got this nice thick printer paper here that I just write